Good morning. Wishing you a wonderful Wednesday. Welcome to today's episode of Morning Wealth. Three things that we will talk about: Walmart's results, US retail sales drop, and an FX roundup. Stocks fell on Tuesday after signs emerged that the fresh wave of virus infections is having an economic impact. New data showed retail sales rose 0.3% in October, well below the 1.6% gain that we saw in September. Industrial production also rose 1.1% in October, but the output for the month was still 5.6% lower than its pre-pandemic February level. The Dow fell 167 points, while the S&P 500 and the Nasdaq fell 0.5% and 0.2% respectively. Elsewhere, Amazon announced it launched an online pharmacy which sent retail pharmacy stocks plunging. Tesla surged 8% on news that it will join the S&P 500 next month. On the Treasury side, the 10-year yields were down 4 basis points to about 0.87. The dollar was split against the G10 basket, with the yen among the best performers and Aussie the worst. Oil erased losses and gold fell. Asian equity futures are narrowly mixed. Walmart reported Walmart's total revenue increased 5.2% in the quarter ended 31st October compared with a year earlier, while comparable sales in Walmart's US stores increased 6.4%, much better than the 4% that analysts had polled. E-commerce revenue in the US grew 79% and came in with a more modest operating loss. One explanation for higher e-commerce margins was the mix of products consumers were shopping online. Higher margin home and apparel products sold particularly well, though the real standout was Walmart's third-party marketplace, which grew sales by triple digits. 13F filings continued and Palantir surged to a record after Steve Cohen's Point72 disclosed it bought about 29.9 million shares of the data mining company in the third quarter. Anchorage Capital also acquired stock. Soros Fund Management said its current stake in Palantir amounts to about 1% of its Class A shares, adding that it made the investment in 2012 but won't do the same again today. It was all about retail sales yesterday. Commerce Department on Tuesday reported that the US retail sales grew by 0.3% in October from a month earlier, far slower than the September's 1.6% gain and below the 0.5% that economists had expected. Several sales classes, including clothing stores, sporting goods stores, and department stores, registered outright declines. In many respects, the weakness in retail sales shouldn't have been a surprise. Millions of people remain out of work. Much of the money the government injected into the economy during the spring stimulus has run out. Still, economists thought that the momentum in sales could carry through a bit longer, helped along by Amazon shifting its Prime Day to last month and competitors including Walmart and Target rolling out online holiday deals early. What makes October retail sales slowdown especially worrisome is the fact that it largely happened before the surge in the COVID cases now that's engulfing the US. That is darkening the outlook for retails just as the holiday shopping season begins. Meanwhile, the chances of a significant stimulus package coming out of the Congress before the year end looks really slim. All this doesn't add well, and particularly for the small retailers, it really is going to be a rough winter ahead. Quick FX roundup. In Europe, there are early signs of the second wave slowing. Aggressive lockdowns across the continent are working, with new virus cases in Germany, France, Italy, Belgium, and the Netherlands finally coming down. Throughout this time, Euro has been very strong. It's holding about 1.18 versus the US dollar. One argument for the Euro's resilience is the US is lagging Europe by a few weeks, which means cases in the US will compound before they decline, while cases in Europe will continue to fall from the highs. While that may be true, the contraction in Europe could be deeper because of the tougher nationwide measures that were taken. And European Central Bank made their plans to ease next month, which is very clear, whereas the Fed hasn't dropped any definitive hints about the stimulus. The strongest currency yesterday was sterling. There was an article in the UK Sun that talked about the possibility of a UK-EU trade deal next week. Although very little progress has been made on Brexit negotiations, the persistence on both sides, the overall strength of the sterling, is a sign that investors still believe that an agreement can be reached before the end of the year. Meanwhile, the Australian and New Zealand dollar sold off against the greenback. RBI minutes showed a central bank ready to provide more stimulus, though their preference is to bond purchases as they don't see it reasonable to lower interest rates further. New Zealand reported stronger service sector activity, but with stocks selling off, New Zealand dollar succumbed to the profit taking. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.